A very good day, Doctor. We have chosen consumer products and services as our sector and food and beverages as our subsector. Under this sector, we have chosen 5 companies to analyze on. The first one would be Ika Holdings Berhad, continued by Ajinomoto Malaysia Berhad, Cocoland Holdings Berhad, Dutch Lady Milk Industries Berhad, Oriental Food Industries Holdings Berhad. From all of these 5 companies, we have chosen Dutch Lady Milk Industries Berhad to analyze in more detail because the annual report for this company is very easy to understand and the information provided is straightforward and easily obtained. The vision of Dutch Lady Milk Industries Berhad would be to further strengthen our position as a leading dairy company driving growth, and the mission would be helping Malaysians move forward in life with trusted dairy nutrition. The purpose of a vision is a futuristic vision which the company wishes to achieve, while the mission would be objectives that the company wishes to accomplish. In order to achieve the vision, the company has to follow its mission and change strategies according to their capabilities.
Corporate social responsibility. Dutch Lady's corporate social responsibility activity is centered on women and children. Hence, aside from its work with children via various education programs in schools, Dutch Lady has established a Working Mothers Foundation as a platform for working mothers to discuss the challenges of balancing work and personal life. Furthermore, from January 2011, Dutch Lady increased maternity leave from 60 days to 90 days for its
Statement of Corporate Conference. The Statement of Corporate Conference is vital and it is aimed to help the Dutch Lady Milk industries to ensure sustainability as well as progressive business growth of the company. It enables effective, entrepreneurial and conservative management leading to the company's long-term success. It is system in charge of directing and managing organizations. It will ensure that everyone follows appropriate and transparent decision-making process, that interests all stakeholders are protected. CT will affect the performance of Dutch Lady by initiating its objective. The board is pleased to report on conference compliances activity adopted in the line with the principle as set out in the code that were applied throughout the financial year ended every 31st December in the corporate conference overview statement. There are 3 main principles. Principle A, board leadership and effectiveness. Principle B, effective audit and risk management. Principle C, integrity in corporate reporting and meaningful relationship with stakeholders.
Statement of risk management and internal control is a summary of the specific risk, key risk factors and mitigation actions. First, risk management helps company to identify and evaluate the risk. For example, COVID-19 pandemic considered as a risk in 2020. Next, it always updates the risk mitigation actions. For example, strengthening e-commerce strategy is one of the mitigation actions. Moreover, internal control helps company to maintain a good reputation. Dutch Lady Milk Industry Berhad provides employee handbook that guides employee behavior so that the employees conduct themselves with integrity and objectivity. Lastly, internal control provides reliable financial and non-financial information to the public, which ensures that all information free from any material misstatement.
Now, I would like to explain about the Audit Committee report. A committee board should consist not fewer than 3 directors with independent members. They should have experience in business organization and degree of financial literacy. For example, Dutch Lady Annual Report provides critical insight for the company's condition to function effectively with resources. Operation of the business requires audit committee who understand accounting policies. They will also meet at least 4 times annually to analyze company financial statement and evaluate overall company's performance. As a result, accurate and clear findings from the audit committee report benefit investors and also stakeholders to understand how the company is the usefulness of accounting information. Accounting information is the transactions and event go across a business entirely. It is important to provide daily information in the company for current and future usage. Internal and external users will use accounting information as well. Balance sheet shows actual business financial position with assets, liability, and owner's equity. Bankers can assess the business qualification for additional loans, whereas investors can know where their funding go and what to receive. Mostly, all investors appreciate business with higher cash assets. An income statement shows a company revenues and expenditures. Profit and loss recorded will alert the management to take immediate action plans. Investors and creditors will analyze the company's profitability before investing or providing. Besides, cash flow statements measures company's health, profitability, and long-term prospect. Investors will judge company readiness with cash in buying assets and pay expenditure. They can also know the business well-being by reviewing cash flow statement to check how much a company earns. Statement of change in equity is a transaction summary which analyzes the strengths and weaknesses of company. Shareholders and investors can trust the company with their complete and detailed record about the profit and losses.
Next, we move to 2 types of financial users and their specific financial position. There are 2 types of financial users. The first one is internal users. Internal users consist of employees, managers, shareholders, and directors who are responsible for making essential company decisions. They are a group of people who clearly understand the company operations and manage. For employees have the responsibility in reviewing the annual report and consider the benefits of the company. Secondly, managers responsible to manage and enhance the company performance. The last but not least is shareholders and directors. They provide funds or capital for the organization and would like to keep updated with the organization's financial information.
External users. External users are persons outside of an organization and uses financial information to make decisions. First is customer. Customer use financial information to analyze capacity of a company to continue operating. Second is suppliers. Suppliers are interested in the capacity of the company to meet short-term obligation. Third is lender. They are interested in the statement of cash flow because they are able to assess the capacity of a business to repay the loan and the interest. Fourth is government. Government is interested in the statement of comprehensive income for tax collection purposes. Last is competitors. Competitors are interested in financial position of other companies because they use the financial information as a benchmark to maintain their competitive level.
Now, my group members will explain in detail about the ratio
The
analysis.
first one is profitability ratio. Profitability ratio consists of profit margin on sales, return on assets, return on ordinary share capital, earnings per share, and payout ratio. Profit margin on sales is net income divided by net sales. Dutch Lady Milk Industries Berhad, Ajinomoto Malaysia Berhad, Eka Noodles Berhad, and Coca-Cola Holding Berhad experience decreasing trend, while Oriental Food Industries is showing an increasing trend. However, Eka Noodles Berhad shows negative figures for both years due to the company was facing loss for those 2 years. The highest ratio for 2019 is Coca-Cola Holding Berhad, and the highest ratio for 2020 is Ajinomoto Malaysia's Berhad. Next is return on assets. It is calculated by dividing net income with average total assets. The companies that show a decreasing trend is Dutch Lady Milk Industries Berhad, Ajinomoto Malaysia's Berhad, Eka Noodles Berhad, and Coca-Cola Holdings Berhad, while the company that shows an increasing trend is Oriental Food Industries Holdings Berhad. And again, Eka Noodles Berhad shows the negative figures for both years. The highest ratio is Dutch Lady Milk Industries Berhad for both years. The third one is return on ordinary share capital. It is calculated by dividing the change of net income and preferred dividends with the change of average shareholders' equity and ordinary. The companies that show a decreasing trend are Dutch Lady Milk Industries Berhad, Ajinomoto Malaysia Berhad, Oriental Food Industries Holding Berhad, and Coca-Cola Holdings Berhad. And the companies that show an increasing trend are Oriental Food Industries Holding Berhad and Eka Noodles Berhad. Again, Eka Noodles Berhad experienced negative ratio for both years, and the highest return rate is Dutch Lady Industries Berhad. For the earning per share, it is calculated by dividing the difference of net income and preferred dividends with weighted average shares outstanding. The companies that show a decreasing trend are Dutch Lady Milk Industries Berhad, Oriental Food Industries Berhad, Eka Noodles Berhad, and Coca-Cola Holdings Berhad. And the company that show an increasing trend is Ajinomoto Malaysia's Berhad. Based on the ratio, Eka Noodles Berhad is having a loss per share for both years. And again, the highest return rate is Dutch Lady Milk Industries Berhad for both years. Last but not least is payout ratio. Payout ratio is cash dividends divided by net income. The companies that show a decreasing trend are Dutch Lady Milk Industries Berhad, Ajinomoto Malaysia Berhad, and Coca-Cola Holdings Berhad. And the company that show an increasing trend is Oriental Food Industries Holding Berhad. And for this ratio, Eka Noodles Berhad was unable to be calculated due to insufficient information in their financial information. And definitely, the highest return rate is Dutch Lady Milk Industries Berhad for both years.
Next is liquidity ratio. Under liquidity ratio, there are current ratio, quick ratio, current cash debt ratio. Firstly, current ratio is equals to current asset divided with current liabilities. We can interpret that Oriental Food, Eka Noodles, and Coca-Cola experiencing an increase from the year 2019 to 2020. Dutch Lady Milk and Ajinomoto experiencing a decrease. The highest current ratio for the year 2019 is Ajinomoto, whereas 2020 is Coca-Cola. Therefore, ability for the both companies to settle the short-term liability is high compared to other companies. Secondly, quick ratio is equals to current asset plus short-term investment plus account receivable divided with current liabilities. We can interpret that Oriental Food, Eka Noodles, Coca-Cola experiencing and increasing from the year 2019 to 2020. Dutch Lady and Ajinomoto experiencing a decrease. A high quick ratio for the year 2019 and 20 is owned by Ajinomoto. So where the tendency for the Ajinomoto to pay back its short-term debt, the most liquidated asset in the company, is higher compared to other companies. Lastly, current cash debt coverage is equals to net cash provided by operating activities divided with average current liabilities. From the table, we can see that Dutch Lady Milk, Oriental Food, Eka Noodles, Coca-Cola experiencing an increase from the year 2019 to 2020. Ajinomoto just experienced a slight decrease. Higher current cash debt coverage for the year 2019 is Ajinomoto, for the 20 is Coca-Cola Holdings. Thus, the ability for the both companies to pay back its short-term debt through the cash obtained in the operating activities of the year of the companies is higher.
Leverage ratio. There are four types of ratio under leverage ratio, which are debt to asset ratio, time interest earned, cash debt coverage, and book value per share. First, debt to asset ratio. This ratio shows how the company used debt to finance its asset. These are the ratio analysis. Second, time interest earned. This ratio shows the ability of the company to meet its debt obligation based on its current income. Ajinomoto Malaysia Berhad was unable to be calculated because the amount of interest aspect cannot be found in the annual report. These are the ratio analysis. Third, cash debt coverage. This ratio shows the ability to settle its debt by using cash from operating activities. These are the ratio analysis. Fourth, book value per share. Ajinomoto Malaysia Berhad was unable to be calculated because the outstanding share were not stated in the annual report. These are the ratio analysis.
Efficiency ratio. Under this ratio, we would discuss on three main ratios, which is accounts receivable turnover, inventory turnover, and asset turnover. For accounts receivable turnover, the formula would be net sales divided by average net accounts receivable. We have conducted our investigation for the year 2019 and 2020, and we got to know that the increasing trend is faced by Dutch Dairy Milk Industries Berhad, Oriental Food Industries Holdings Berhad, and Ikan Noodles Berhad, while the decreasing trend is faced by Ajinomoto Malaysia Berhad and Cocoa Holdings Berhad. In 2019 and 2020, Dutch Dairy Milk Industries Berhad achieved the highest ratio. The purpose of this ratio is to show how efficient a company can collect its debts. Inventory turnover would be cost of goods sold divided by average inventory for the year 2019 and 2020. We have got to know that increasing trend will be faced by Dutch Dairy Milk Industries Berhad and Ikan Noodles Berhad, while for the decreasing trend is faced by Ajinomoto Malaysia Berhad, Oriental Food Industries Holdings Berhad, and Cocoa Holdings Berhad. The highest ratio is achieved by Ikan Noodles Berhad for 2019 and 2020. The purpose of this ratio is to show how efficient a company can generate its sales enough to utilize its inventories. The third one would be asset turnover, where the formula is net sales divided by the average total assets. We got to know that the increasing trend for 2019 to 2020 would be faced by Ikan Noodles Berhad only, while the other companies have faced decreasing trend, which would be Dutch Dairy Milk Industries Berhad, Ajinomoto Malaysia Berhad, Oriental Food Industries Berhad, and Cocoa Holdings Berhad. Although Dutch Dairy Milk Industries Berhad faced a decreasing trend, it still achieved the highest ratio for 2019 and 2020. The purpose of this ratio would be to show how efficient a company can use its assets to generate revenues.
There are two investment potential ratio. One is price to earning ratio and the other one is dividend yield ratio. First, price to earning ratio. Price to earning ratio is calculated by dividing share price with earning per share. Based on the table above, it is clearly stated that only EKA Noodles Berhad faced a negative sign in both years. This is because EKA Noodles Berhad is suffering from losses per ordinary share caused by the losses on their income statement. A higher price of earning ratio shows that investors are willing to pay more shares price in the current market because of the future growth expectation. Hence, based on the table above, we can conclude that the investor prefer to invest in Oriental Food Industry Holding Berhad as it has the highest price to earning ratio compared to EKA Noodles Berhad, which has a negative price to earning ratio. Next, dividend yield ratio. Dividend yield ratio is calculated by dividing annual dividend per share with share price. Based on the table shown above, the dividend yield ratio for EKA Noodles Berhad is equal to 0 as the organization is facing losses in their net income for the year 2019 and 2020. Thus, there's no dividend given in both years. Normally, investors will look for companies that offer a higher dividend yield ratio. In this case, Dutch Dairy Milk Industry Berhad is the most probably company that the investors are looking for compared to others company. However, it is important for investors to find out the reason leading to the high dividend yield ratio of a company. Hence, although Dutch Dairy Milk Industry Berhad has the higher dividend yield ratio, still we cannot conclude that every investor will invest in Dutch Dairy Milk Industry Berhad compared to others companies above.
Limitation of ratio analysis. There are some limitations that will result in inaccurate ratio analysis. First and foremost, the company might come up with a new business pattern to increase their profit where it will cause some changes in the operation of the company. This is because when a company changes its operational structure for them to upgrade their supply chain strategy in order to the product that they are selling. Besides that, generally when a corporation calculates the ratio, the management will ignore price fluctuation that caused by inflationary effects. This is because nominal price and real price will be different when there is a inflation. Last but not least, ratio analysis will become unreliable when the information given by the company is inaccurate. Ratio analysis is based on the information disclosed by the company in their financial accounts.
Practical difficulties faced in calculating the ratio. There would be four, which the first one is some specific information needed for calculation is hard to obtain because certain companies do not provide it. Next one would be human error, which is commonly to happen where mistakes are always occurring. And the third one would be certain companies have different financial periods compared to other companies. Example, certain companies do it 12 months once and certain companies do it 6 months once. And the last one would be manipulation of financial
Based
statements.
on the results of ratio analysis, we would strongly suggest choosing Oriental Food Industries Holdings Berhad. First and foremost, its profitability ratio always showing the increasing trend in every ratio. In addition, it also shows quite good performance in liquidity ratio compared to others company in the same industry. Furthermore, Oriental Food Industries Holdings Berhad leverage ratio is better than other companies. Last but not least, even though Oriental Food Industries Holdings Berhad's efficiency ratio is not the best one compared to others, but its performance is still considered as moderate.
Conclusion. We can conclude that based on ratio analysis, Oriental Food Industry Holding perhaps has better performance than other companies. However, in decision making, investors should refer to financial accounting information and non-accounting information because non-accounting information also provides useful information.